Hello traders, welcome to the LFB and our global video charting review. It's the 2nd of February 2011 and this is the look at the global equity markets. Just like to draw your attention to the disclaimer that's posted on the video page. Please read and accept the disclaimer before moving forward. Global equity and interest rate markets held the higher ground in trade on Wednesday ahead of the US ADP employment numbers that are expected to show the private side of the jobs market generated 150,000 new positions compared to the 297,000 that were reported last month. Now, the ADP numbers are a little bit different to the non-farm payroll. ADP is a private company that dominates US payroll processing. Some analysts look to get a comparison from ADP as a precursor to the non-farm payroll report, but the non-farm payroll has a lot more survey and estimation in it. The ADP number seems to be more of a hard and fast number that will create probably more reliable trends over the course of a 10 to 15-year period of reporting. The Japanese Nikkei, which is the chart we're seeing here, courtesy of the automated trading program from the LFB, opened up with a gap in prices that cleared the 50-day simple moving average area to trade at 10,500, and that's the 20-day simple moving average that we're trading at right now. The energy used in the initial move has taken the momentum out of the Asian markets, and most look as though a test of support is required before another push higher can easily happen. But you can see on these charts how dramatically disjointed Asian equity trade is at this point in time, especially the Nikkei, with gaps on most days that then consolidate heavily. Asian markets do tend to have their own nuances. The Japanese Nikkei, for example, physically closes for lunch, and that does create that disjointed pattern of trade that can sometimes lead to very sporadic periods of price movement. The German DAX completed its upside target issued yesterday with a test of 72.20 that leaves the equity index at yearly highs. A period of consolidation is likely to take place ahead of the European Central Bank interest rate decision on Thursday, and traders will be very much aware of the impact that the January press conference from the ECB made on global market direction, sentiment, and trend. There was a big move in the euro and in German DAX equity markets after the ECB rate decision and statement last month. This month is likely to be no different, and it may be the case that the ECB will use the press conference just to take a little bit of steam out of the value of the euro, which will be impeding the export side of that economy. It does look as though the German DAX will be looking to test support before breaking out to upside resistance, and if that is the case, would be looking for a pullback to 71.60 and then to 71.20. Outside of being at yearly highs, these global equity market charts are really not very appealing. They're sporadic in their price movement. There's one or two 30-minute periods of trade in any given regional trading session that tends to house most of the momentum, and then we have a sideways slog for the rest of the time. S&P 500 futures trade tracked sideways ahead of the Wall Street Open, managed to hold bids above 1,300 with upside targets at 1310 and 1320. If a sustainable break does happen, 1335 will be the reversal point. New long positions on any global equity market would be best advised to be placed after a pullback to support rather than looking to buy any new breakouts at the current extended levels. At this point in time, there are no new signals on any of the global equity markets.